Hello, friends. Today we're taking a look at Harley-Davidson, ticker symbol HOG. We'll be looking at, they just reported this past week, and we'll be looking at the earnings report, the past 10 years of finances, and then we're going to try to determine if this is a good buy for us in the long term, if there is value right now, and if there is value, what would be a fair value for us to what would be the fair value for this stock, and then from there take a margin of safety. So as you can see, in the past 5 days, it has been going down. It went down for about 12%. I think it dropped on earnings 8%, 11%, and then recuperated to about 9 to 8%. As soon as I saw I used to own, at the beginning of the week, I owned Harley-Davidson, and I sold it because of some of the things that I saw in the earnings I'm going to be sharing with you. And also I listened to the call, and there's some things that they talked about that I just didn't like. So I have no problem going down with a stock if I believe in it, and if it's just a temporary thing. But I just been looking at this stock for a while, since it has been dropping. This past year it has dropped almost 40%, and in the last 5 years you can see that it just kind of stays around between the 30 and 50. I've been thinking about buying it I wanted to buy it around 30 and then wait a little bit until it goes up, but you know that is trading, and that's not how value investing is supposed to be done. So with that said, I am going to be looking right here. Let's go to the earnings. There's a lot of things that went wrong for them. One of them is that revenue declined 10%, which is there also was about a 20% decrease on shipments, and we'll be looking at that. There was a financial services. So if you don't know, Harley-Davidson, they make, of course, they make the Harley-Davidson motorcycles. They also sell parts. They also finance the purchases of that, and they have this new, new to me, I didn't know. They have something called LiveWire, which is their EV motorcycle. So here, LiveWire commenced with the product launch of Del Mar electric motorcycle. But revenue declined 15%. Increased 15% in the financial services. But there is some issues behind that. Let's just keep looking over here. As you can see, revenue declined 6%. Operating income negative 36% and 38%, and the EPS went down 22% compared with last year. So part of the declines we see over here, that motorcycle parts and apparel, they also sell the rights to their logos and all this other stuff. Licensing is 10%. Apparel was down 29%. So operating income is just really bad. The part that I was worried about is here, sales went down an average of 16% all around the world. And most importantly, that even though there was a 13%, 15% increase in revenue, there was a 27% decrease on this the financial services. And part of that is the same issue that Ally Bank is going to be having coming soon, is that they declined 22 millions or 27%, driven by the increase of provisions for credit losses and higher interest expressed, which means is people are starting to feel the effects of the upcoming recession. They're starting to either lose their job and not be able to pay they're just not able to pay their debt, and that is going to be hitting hard Harley-Davidson, and I think most of the banks that's why they're selling right now so cheap. When it comes to electric motorcycles, there was a 76% decline on their shipments. And when I was listening to the call, they were talking about how a lot of the dealers were kind of worried about they still having inventory in the dealership. So, of course, the management tried to put a nice spin on it, but I don't know. I'm really thinking that the issue with Harley-Davidson, what I see is here in the finances. As you can see, revenue, it kind of stays steady. It goes up and down. This is a very cyclical and kind of company. This company does good whenever the economy is good because people have extra money to spend. When it when we go into a recession or we have a financial crisis, then things starts going down. Just you can see here with COVID, with the earnings per share, the past 10 years, they have grown 5%, revenue an average of 4% too. Profit margins are only 9%. Free cash flow, it has been kind of all going up and down. The margins in the past 5 years, it says that it's 16%. But if I remember looking at my data, the last 2 years of free cash flow margin, it has been at a 6 or 8%. So I don't know. I don't think that this is a company that especially with the next 2 years, I personally, now of course this is my opinion. This is just for educational purposes. You do not make investments based on what I say or any YouTuber say. You do your own research, and then your own risk factors. Book value per share is very steady. It has been growing up, which is something that I liked before. But I bought these shares when I thought that there might be a possibility of a soft landing. Dividend per share, I think they got caught in 2020 and they have increased a little bit. I think the management is doing a good job. This is a good idea. A lot of people don't like whenever dividends get caught, but if they don't need to get into debt, and this is a good move. However, if we see here, they have a lot of debt. It's been growing for about 10% every year. Interest rates are going up, and they can, if they were to take the free cash flow, it would take the average of the last 5 years of free cash flow. It will take them almost 8 years to pay the long-term debt that they have, which I am always looking for companies that they are lower than that. They have been buying shares, which it's okay if they're buying those shares at low valuations. They have been buying an average of 4% a year. So the growth is okay. Analysts think that it's 5%. I think there's better opportunities out there. I might look at this company personally for me to buy it. It will probably be about a year from now and see how their things are turning around after they write off losses on the financial section, and see how I think that also the war and the China, let me just go here and show you this. You probably have time, right? So if you notice here, North America, the sales of motorcycles went 15% down. EMA, I believe that is the Middle East. Where are we? Middle East went down 13%. Latin America, 11%. Kind of steady. But here you see the Asia Pacific. It has gone down. Sorry, I think this is European market. Sorry. It's 24% down. And this is by a weaker than expected China demand. And that's another thing that companies that are exposed in China, there's going to be a big problem coming out, because if you have been watching the news, the economical news, the China market is not doing the best. Sorry that I'm a little gloom and bloom over here, and I'm talking a little bit more. Let me know if you hate that. If you just want me to go through the numbers and shut up, let me know about that in the comments. However, if you disagree with me and you think that this is a good company to invest, that things are going to be turning around, you believe in that the war is in Russia and Ukraine and Israel and Palestine, all this are going to go away, that we're going to have a quick recovery here in America, and that China is turning around, and you would like to be looking at a price to buy this company. If you look at the multiples valuation, we're looking at about somewhere around 40 to 46%. Looking at the either the average of the last 5 years or the trailing 12 months. If you use the payback valuation, I use the 1% just because it kind of stays up and down. So for me, it makes sense to just leave it at 1%. So that would be about a fair value of $60 to $84, which is what analysts are thinking. Discounted earning valuations is somewhere between 23 to 34 for fair value. Owners' earnings valuations is pretty high. I was looking into it, and I just don't understand why it's so high. And it could be that this is what is fair for the company. It's just that it is discounted because of the risk of the cyclical nature of the business, which will kind of make sense now that I'm talking aloud. So based on that, if we put all the valuations together, a fair value for Harley-Davidson will be somewhere between $48 to $53. If you were to put a 25% discount on it, it will still be you're good to go. Pretty much, you can buy at $26, and target price is somewhere around $44. So if you want a 50% margin of safety, that still put you at almost a buy. I am going to stay away from this, like I said before, this stock for a while, and just keep an eye on it. If you disagree, if I'm missing something, just please let me know. Write it in the comments, and then thank you for listening.